Alrighty, ladies and gentlemen, there we go. Sorry, man, there's been a lot of audio issues on the Dylan Holy Experience recently. I am not going to lie. Let me know if I'm coming at you loud and clear in the chat. Let's take a gander. It sounds like I am, which is good. So I'll take that. Well, welcome to your midweek market recap. It is 6:02 p.m. on the Pacific Coast, Pacific Standard Time, and 9:02 Eastern Standard Time. So shout out to all of you East Coast listeners and West Coast for sure. Ride or dies for sure. Come on, listen. I love my East Coast, but listen, I'm personally West Coast. I like the West Coast more. But that's all good. That's all good. It's been a pretty eventful week thus far in terms of news. This is going to be your midweek market recap, as they say on the Dylan Holy Experience. And let's just jump straight into it. S&P futures were flat on Wednesday night after strong retail sales data suggested a resilient U.S. economy. S&P 500 futures climbed 0.09%, while futures linked to the Dow Jones Industrial Average inched up by 4 points, or 0.01%. NASDAQ 100 futures rose 0.22%. And those are the futures, so that's not the actual trading session. We're going to jump into that a little later. And you know what? Screw it. Do the millions know what time it is? I said, do the millions know what time it is? I'll tell you what time it is. It is time for an at Real Dylan Holy plug at Twitter, on Twitter, at Real Dylan Holy, giving you the best financial news and insight I can give you, that we at the Dylan Holy Experience can give you, because it is larger than a one-man show. I'm still the chief proprietor, but it's not just a one-man show. It's the millions own the Dylan Holy Experience. Nonetheless, we did cover also key takeaways. We always cover what's going on the market days. But the Dow Jones and the S&P 500 did have a green day overall. Let's take a further look over here. Stocks closed slightly higher during the regular session on Wednesday, despite falling earlier in the day after a stronger than expected January retail sales report. And let's take a look at that sales report right now. So retail sales jumped 3% in January. And keep in mind, guys, this is probably the most controversial news story that the Dylan Holy Experience has ever covered and ever put out on Twitter, which you bet your sweet bucket we did right here. Retail sales jumped 3% in January, outpacing the 0.5% inflation rate. Now, that being said, all right, I think there was some lost in some information that was lost in translation here, and I do want to cover it a little bit. That being said, the 0.5% inflation rate versus the 3% retail sales jump in January. Someone in my comment section, shout out to we'll just take a little gander here. Yeah, it was a really toxic comment section, this one. But no, they were saying that this was misinformation. I don't agree, and we're going to get further into that, but they say that the retail spending was all on credit cards rather than money out of consumers' pockets. People are getting farther in debt, and that is 100% true. If we take a look at the actual credit card debt numbers, it hit an all-time high. Like, on February 11th, the Federal Reserve Bank of New York announced that credit card debt hit $930 billion for Americans in the final quarter of 2019. But if we take a further look here, yeah, they're only showing 2020. So let's take a look at the household credit card debt. Household credit card debt 2022. Yeah, because this is going to actually give us some real insight. So if we take a look at credit cards, the total amount of money owed on credit cards for the first time ever these numbers have ever come out, it topped $1 trillion. Credit card debt is at over $1 trillion now. So this lurker on Twitter, paula.wall@yahoo.com, that is actually her publicly doxed username. I'm not doxing her email address or anything. This is her publicly doxed username. First of all, thank you for taking a little gander at my corner of the internet, at Real Dylan Holy on Twitter. But But thank you for also giving us some insight here. And yeah, it's totally true. Like this retail sales number, it did jump 3%. And it did actually outpace the estimates of the 1.9% jump from Dow Jones. But that being said, it's all skewed, dude. Like, yeah, like the amount of money that was being used to purchase things did go up. But so did credit card balances, and savings rates dropped. So take a gander at that. Now, that being said, it was a little lively in the comment section. It was mostly people that the 0.5% inflation rate was lost in translation. So yes, people were yelling at me that there was an annual gain of 6.4% year over year. Totally true. We covered that yesterday, actually, when the CPI numbers came out. Same thing with the price of food. And we're going to be talking about those CPI numbers. I guess we're talking about them now. But we're going to be also breaking them down a little further as well in just a wee bit. But yeah, so the actual year-over-year CPI numbers hit 6.4%. So the annual year-over-year inflation rate, which is I think what people typically use as the guiding metric, especially of where we were last year, it does have an annual gain of 6.4%. But if we were looking at the month-to-month, which you know, I guess. Just saying outpacing the 0.5% inflation rate, I could have said outpacing the 0.5 inflation rate, comma, month over month. So I'll make sure, especially now that I have 4,000 characters on Twitter, there's no reason to not be perfectly clear. So going forward, here at the Dylan Holy Experience, we are going to make sure everything is clearly outlined. You know, obviously, we always set out with the highest of journalistic integrity and just general interest in the market. Like, man, at the end of the day, I myself want the realest, highest quality information to be able to digest. And through that, I think everyone else wants that. That's what everyone strives to do, and that's what I strive to make sure people see, at least coming from my, again, corner of Twitter, corner of the internet. I just want to make sure people are getting the realest, clearest news. And going forward, yeah, we are going to make sure, like, basically everything is perfectly lined out. And of course, we also give credit to any source that we actually pull from, or any piece of picture or video that we or GIF that we also use. We properly source. Anyway, people were saying that the annual gain of 6.4%, which is the most popular metric in what most people, when they see inflation rate, that's probably what they generally associate. It did hit 6.4%, but if we're looking at the month to month, the 0.5% inflation rate did underperform the 3% sales jump, which is good. That is a good thing that the inflation rate is less than the actual sales jumping. But also credit card debt hit an all-time high, and also savings rates are hitting a generational low. We haven't seen savings rates this low since before the 2010s. So probably the recession of the great financial crisis, of people actually pulling from their savings accounts. But let's just jump straight into this CPI. You know, obviously, just having straight CPI, I think that's a little skewed, because they don't weigh. Again, we've talked about this ad nauseum on the Dylan Holy Experience, but the actual CPI numbers are skewed, man. They don't weight they weight the price of a used car significantly more. It's actually the highest weighted thing in the actual CPI numbers. A used car, they weight it more than the price of food. And obviously food is more volatile, but it's food. When people talk about inflation, it's about food, bro. Yeah, everything else gets expensive and more expensive. You know, gasoline gets more expensive, but also that was a little exacerbated by the Russo-Ukrainian conflict, but also being exacerbated by major oil companies price gouging. There's also that. That being said, I am a major shareholder of Exxon and Chevron. So take it that what you will. I do own stock in them, but they are price gouging. They are a big oil price gouging corporation. Let's make that perfectly clear. But the price of gasoline rises, the price of energy rises, the price of food rises. And if we take a look at the actual price of food, it rose. Oh, did they get rid of that? Huh, how handy dandy. Let's do I know there was the actual, CNBC actually did a CPI breakdown, and we're going to take a look at that. CPI breakdown. Come on, baby. There we go. Let's condense this information for you. Get a better visual. These CPI numbers, if we take a look, food at home, which is like actually like going to the grocery store and buying food, is up 11.3%. Just food overall, so that's including like takeout and everything. The price of food is up 10.1%. The price of eggs year over year up 70%. 70% eggs are up 70%. Holy shit, dude. What? It's absurd. Butter plus margarine up 32.5%. Fuel, oil, all. So gasoline. Gasoline's up 27.7%. Utility piped gas service, 26.7%, up 26.7%. Airfare up 25.6% as an extension of the gasoline. And fun stuff going on with the price of oil and the geopolitical events following the price of oil and oil production. Motor vehicle repair up 23.1%. Frozen vegetables up 18.6%. So everything, dude, motor vehicle insurance, insurance up 14.7%, electricity 11.9%, and then everything else, computers are actually down, televisions are actually getting cheaper, but that's like that's an economy of scale thing, and that's that being a mature product category. I think like the assembly line itself, they're probably operating on tighter margins than they were a year ago. But yeah, so like. Yeah, inflation is at 6.4%, and inflation is like they weight like used car. Again, dude, used cars being the highest weighted thing in the CP and the traditional CPI, they dropped 11.6%. So like it's outweighing this event right here is they generally do this on purpose because it's typically used cars in the automobile industry are debt-based industries. So when you typically see interest rates dropping, the stuff gets more valuable, and it's basically like a house. It's just like the car and automobile industry, the capital vector of that, the avenue in which the capital actually goes into this industry is structured the exact same way as the real estate industry, like the financing of vehicles, and it's significantly more nuanced, and there's way more variables when doing this in the real estate industry. But financing a car at the end of the day is nearly the same thing as financing a home or financing an apartment building or an office space. So it's going to operate, and these actual industries, the home industry and the automobile industry, the actual financing wing and dealership wing of things, they get directly impacted by rising interest rates, and now everything else is kind of flowing out of control. And because it's so high weighted, everything else doesn't really matter. Actually, well, it matters significantly less than like what food should. Like food really is not weighted how it should be in actuality. Like food is like our fucking first biggest purchase after sadly people's financed automobiles, me included, and also their shelter payments. So whether it be rent or their mortgage payment. But yeah, like food is. We cannot live without food, and they don't weight it as high as they should be, and that's wrong. That's wrong. Oh, speaking of which, boom, yeah, dude, mortgage. Let's move over to the real estate side of things. So real estate is still lagging behind. I think that the price of used cars, the one thing that the real estate industry has going for it as an investment asset class. As an investment class to be investing in is like the equity in a home is significantly easier and more maneuverable than the equity in a car. Like I would be hard pressed to find any financial institutions right now doing an ALOC, an automobile equity line of credit. I don't think any financial institution would be giving you an equity line of credit on your automobile. Especially one like with HELOCs, you can get a HELOC and still like have a mortgage on your home, like still have so it's called a lien on your home, just like how if you have a financed car, there's a lien on your vehicle. So typically the first lien holder of a home is the bank or whichever institution financed your actual mortgage. And then and then there's always a second lien that's typically allowed. That's typically for like a home equity line of credit or a home equity installment loan, excuse me. So there's a lot better. Let's run it back. There's a lot better and significantly more dynamic options for being able to tap credit in your home or tap equity in your home. And on top of tapping equity in your home, like it has more, the home itself has a more tangible use for us than like a car. Like, dude, cars are your second, I think like it's most people's second biggest asset, cars. After their home. And cars are literally like the fuel that this whole thing is built on, dude. Everyone drive, at least in America, everyone basically drives somewhere to go be productive for 8 hours a day, 40 hours a week. 100 million, how many cars or how many people drive cars every day in America? Let's take a look at that. How many people drive cars every day in America? Let's take a look here. Oh, from Brookings? Let's go. So this is from 2016. So it is going to be a little outdated, but our population is stagnating. It's probably going to be like there's probably like 5 to 10 more million people now. But there are at least in 2016, there are at least 115 million cars and trucks hitting American streets every day. 115 million Americans drive every single day. So yes, cars are important. I'm not saying that cars are not important. But I do think that the home, we can live without a car. I don't think we can live without a home. I'll say that. So thus, the equity in homes are more important, and home prices, they are not necessarily dropping. They actually rose 6.9% in 2022, but home buyers typically have less than about $50,000 worth of equity to tap. And the actual growth of home prices, if we take a look at Fred, dude, shout out to Fred, dude, just giving us all, dude. Let's go, man. Dude, the St. Louis Fed, they be hooking it up with this Fred stuff, man. Like, they're just giving us all these important metrics. So if you take a look, let's actually run it back a little bit. If you take a look here, so this is the price of a home. Let's move this a little bit. This is the price of a home from Q2. So like March of 1999 to Q4 of 22. So the median sales prices of homes being sold, they do lag behind just a little bit. But if you take a look here, so it's been consistently growing in 2000. So in Q1 of 2007, it actually started dropping, and then it fell to the bottom of 2009. So the median price of a home, or the equity in the median home, dropped about $40,000. Now from there, we've actually jumped like. The price of a home has basically doubled since the bottom, or has over doubled since the bottom of the 2008 financial crisis. Now, for the first time since, and the last time we actually dropped was in Q2 of 2021, or 2020, excuse me, the cursed year. So if we take a look here, the last time it dropped was like at the worst of the COVID pandemic. And from there, it hasn't dropped there has not been equity that has dropped since that point. And on top of that, the actual price movement of a home has never moved this aggressively before. An insane bubble. And for the first time, it has not gone up. It's actually stagnated. It's actually dropped $300. The median price of a home in America in Q4 of 22 actually lost money for the first time in nearly 2 years. Now, in that time that, the price of homes have actually stagnated. The 6.9% year over year growth that we saw in 22. It's certainly less than the over 20 or nearly 20% of median sale price in America, the actual increase of it in 2021. So it's definitely stagnating. It actually dropped from Fred. All the while, mortgage rates doubled from 3% to over 6%. Now, this event that's happening right now, where homes are like significantly more expensive than I think they should be, and interest rates are at the highest they've been in like 20 years or so. This makes an outlier event for the price of a home. So this is not up to date. This is not like this has 12 months basically, or nearly, or like nearly 10 months worth of information lapsed. So it's, it's not on there. It's from like mid 2022 clearly. But if we take a look here, this pricing index has like never happened, or this pricing event that's happening right now has never happened. And I think that we're probably going to get closer to the mean, which means that we're possibly going to end up dropping in price. And again, this is not like, financial advice. This is never financial advice. This is not, me telling you to make a trade or short the housing market. None of that stuff. But I do think that there's going to be a return to mean when there's situations that or market events that swing things to the absolute extreme, the absolute apex of one side. There has to be an equal or opposite reaction to the other side. That's just physics, baby. Now, I was talking about automobiles earlier because they are directly impacted by like financing and stuff like that. Speaking of automobiles, Ford halted production and shipments of its electric F-150 Lightning due to a potential battery issue. Now, it actually came out just a few minutes ago. The F-150 Lightning production halt was triggered by a vehicle battery fire, and it is not going to be addressed until at least the end of next week. But I'm assuming they'll get this worked out, and people are going to be buying more F-150 Lightnings, especially at a discount. Now, lastly, I want to end this on a more political note. The first tag on the Dylan Holy Experience is politics. And that is, hold on, give me one moment. Politics. There we go. Sweet. Now, if we take a look, Senator Dianne Feinstein announces that she will be retiring from Congress at the end of her current term in 2024. She's 89 years old. She is the oldest senator and longest serving senator from California. Man, she's been losing it for a while. I think it's good she's gone. She's an evil political demon who has done nothing but fuck over the American people and her over 50 years in public office. Let's be perfectly clear here. She's not a good person. But no politician is. So yeah, goodbye, Dianne Feinstein. Good riddance. Get out. Bye-bye. But whoever takes her place is probably going to be just as dirty. So, it's just one figurehead moving on and then putting in a new figurehead that is going to hold the office for 50 years or become the next president of the United States. But that's a discussion for another time. That is the end of our midweek market recap. Thank you all so much for watching. Always a pleasure. Let's move into some little plugs. First things first, you already know we spent a decent amount of time on this tonight, but there can never be too many at Real Dylan Holy Twitter plugs. So be sure to follow me at Real Dylan Holy. I'm the host of the Dylan Holy Experience. If you did not know, I'm the namesake. But I'm always giving breaking news. Like, oh yeah, we didn't even talk about this, dude. This is a Dylan Holy Experience exclusive on here. Twitter to allow marijuana and cannabis ads. And on top of that, I want to actually give y'all an even further breakdown, just a little bit. But Twitter, let's pull up this. There we go. Okay, boom. So it's not just THC and cannabis stuff on Twitter. It's also CBDs, and advertisers may not target customers under the age of 21. So yeah, that's fair. Generally, most of the FDA stuff still applies. So, you know, there's still going to be consumer protections and everything. But yeah, like good. You can advertise CBD, marijuana, and cannabis products on there now. Huge, absolutely huge. And also Elon Musk 420. But yeah, so at Real Dylan Holy on Twitter, breaking news, and of course, key takeaways every single market day when the market's open. The Dylan Holy experience is open. I still take weekends. There's work-life balance, at least for right now, but we may be doing away with weekends in a bit because we're going to be working so much. But who knows? Who knows? At Real Dylan Holy on Twitter. Twitch.tv/RealDMH. That's where half of y'all are watching me right now. So be sure to give me a follow for right now. It's always much appreciated. Again, if you want to donate. But again, I'm not asking you to, but if you do, I appreciate it. Thank you so much. And lastly, youtube.com/@DylanHoly. That's where the other half of y'all are watching. So be sure to subscribe at Dylan Holy, youtube.com/@DylanHoly. We have some videos up. We also do the midweek market recap every Wednesday and some more sporadic streams that are always announced in advance, but there are some more sporadic streams going on. Sometimes we do the end of the week market recap too on Saturdays or Sundays. But there we go. Thank you all so much for watching, and y'all have a great rest of your night.